Oh man, what a day. What a day. So we have to go over Nvidia, some news we got. We'll break down the charts here. We'll talk about the indexes, what I'm doing overall as well. Jam-packed video, guys. So let's just get into it. Hit the like button. Let me know your thoughts in the comments. And by the way, take a sip of your coffee. Cheers. I appreciate you all for tuning in. So Nvidia is down 6.5% today. So that's number one. We also have a lot of other chip stocks down. AMD. AMD is down 6%. And oh, yeah, ASML. Did you guys see their earnings? This stock is down 5%. The company missed on revenue. Not a terrible miss, but let me see if I can see it here. 7.74 billion euro versus 7.82 billion euros expected. Not the worst miss, and they beat on EPS, by the way. That was good. But they missed, and boom, the stock's down 5%. And we're going to cover what's going on now with Nvidia. That's not only affecting Nvidia in China, but AMD as well. We'll cover that. And again, Nvidia is down 6.5%. Man, and we'll talk about what I'm doing here with the stocks. So let me pull this article up very quickly so it's easier to kind of go through. So the headline reads, Nvidia faces $5.5 billion charge as U.S. restricts chip sales to China. Let's come down, and there's a lot of ads on the right here, so bear with me here, guys. But it says, and this happened yesterday, and it said it would take $5.5 billion in charges after the U.S. government limited exports of its H20 AI chip to China, a key market for one of its most popular chips. We'll talk more about that in this video, and it says here, NVIDIA's AI chips. They've been a key focus of U.S. export controls as U.S. officials have moved to keep the most advanced chips from being sold to China as the U.S. tries to keep ahead in the AI race, and supercomputers plays that plays a big role here. We'll talk about that in a second. And it said a U.S. Commerce Department spokesperson said on Tuesday, listen to this, it was issuing new licensing requirements for exports of chips, including NVIDIA's H20, AMD's chips as well, and the equivalents for AMD. And the Commerce Department is committed to acting on the President's directive to safeguard our national and economic security, said the spokesperson, I believe, of the White House, maybe. Either way. And for NVIDIA, the H20, this is where it's bad for NVIDIA, is the most advanced chip available for sale in China and is central to its efforts to stay engaged with China's booming AI industry. So NVIDIA is getting impacted a bit now, because they can't really fully sell their chips in China, which their AI industry is booming as well. But that's a whole nother topic in and of itself. But yeah, Chinese companies, including Tencent, Alibaba, and TikTok parent ByteDance, we covered this before, had been ramping up orders for H20 chips due to booming demand for low-cost AI models from startup DeepSeek, which that's a whole nother topic as well, for a whole nother video. And while the H20 chip is not as fast at training AI models as NVIDIA's chips for sale outside of China, it is competitive with some of those chips at a step known as inference, where AI models serve up answers to users. So that chip is still very good in China, whereas there are other models that are being sold elsewhere. We all know about that. And Nvidia said on Tuesday the U.S. government was restricting H20 sales to China because of the risk the chips could be used in a supercomputer. While the H20 has lower computing capabilities than other NVIDIA chips, its ability to connect to memory chips and other computing chips at high speeds is still high. So that's always been a risk. I think they placed restrictions back in 2022. Yeah. for the use of supercomputers in China. So, man, that what a day news-wise regarding Nvidia. That's a big charge, man. $5.5 billion, even for a company the size of Nvidia. That's a big hit on the stock price. Again, like we covered, is taking a haircut right now. And it's not crashing anywhere near to where it was. I mean, I think based on the charts we have here, I think it hit about $83, if I'm not mistaken. Let's see here. I think we got down to about, $83. I don't know what your brokerage says or whether you're on Robinhood or this or that or what. But here it says 83. Now we're at 104.50, right? And full disclosure, I'm long Nvidia, and I bought more just about 30 minutes ago. I think at 104.80, I bought a very small amount. Why not, right? And now I'm waiting for my next drop. I kind of had some cash in the portfolio that I had to put to use for this week, right? So I'm like, let me buy a little bit more. I bought some VTI as well. I'm long VTI. You guys probably know that. And at this point, if it goes under 100 again, maybe anywhere near where it was, we can see if I draw this out. Maybe $93. Maybe it gets back to the mid 80s, high 80s, right? If it gets anywhere near that point, I'm going to be buying even more. So I just bought a little bit today, very small buy. And if we get, again, into this 80-90 range, I'm going to go even heavier. But who knows? Who knows? We don't know what's going to happen. We could all think, oh, my God, stocks need to go lower. The trade war, this, that, yada, yada, yada. And then all of a sudden, they don't go lower. Maybe things stabilize a bit. Then we get a deal out of nowhere. And then, boom, we're right back. So that's why I take advantage. Even if we're not at the lowest price possible, I still like to take advantage on stocks that I like when they're down overall a good amount. So that's why I nibbled a little bit more on this 6-7% drop today. Because, we could go down to 83, but we don't know if that's actually going to happen. The bottom could be in for all we know. It might not be. That might piss a lot of people off. I don't know. Let me know your thoughts in the comments, but that's a quick thought of mine. Let's see what stocks are moving. I know we have, the chips are down, blah, blah, blah. We know that already. Tesla's down. All right. Not too much, though. We have some earnings coming up that I'm watching. Netflix for sure. I don't know if you guys saw it, but this stock broke out yesterday, man. Look at that. We took out 950, which I think we covered that in the email. We covered that level, so make sure to sign up to that free email, the newsletter, link down below. Excuse me, guys. We talked about that 950 breakout. So we got out of there. We got all the way to 990, and now we're in breakout territory, but this is a dangerous spot, especially in a falling market, especially with earnings coming up tomorrow after the bell. I'll leave you guys with this, because if earnings are weak at all at this point, this stock's probably going to come crumbling down right back under 950. That's the risk with a stock going up so much leading up to earnings. This thing is up $175 off the lows, which we hit that like a week ago, 10 days ago, whatever that was. Now we're up to 975. We're up 20+%. So it's like, I don't know. Earnings have to be really strong for this to push higher. And honestly, I kind of hope they are. That would set the tone a little bit here with earnings. So we'll see. We'll see how that goes. But brace yourself. If you think it's going to, for sure, 100% go up more in this falling market overall, be careful. Because, again, man, if they miss on earnings, if their guidance is bad, whoo, man, this gain could be lost like that, like that, snap of a finger. So let me know your thoughts in the comments. Hit the like button. Don't forget to subscribe. Follow along for more content, and I'll catch you all in the next video.